Guys, it is Martin from Live Markets. We have today's trading update for all of you. We'll first of all take a look at the euro dollar because it's at a pivotal level. The system continues to be very bearish, and we just need to manage the risk around the positions right now because the downside is fairly large. We expect, this is the chart, that we expect a move down below 1.14 and possibly to these oversold levels at 1.13. This move has been long overdue, but it's only now in August, in the second week, that we are seeing the breakdown, and we should see a move down. We'll take a look at the volume data here, which just proves our point. Now this is the volume data right at the bottom, and this is euro dollar. This is a representative figure, as you know. This is the FXCM volume, not the whole market's volume, but we consider that to be a proxy or a representative level. Now you see this big red mark here. This is someone sold fairly big here. But post this, we did see a little bit of move higher to test the highs again, but those were on low volume. You see these green bars, so when the prices were moving higher, the volume was fairly low, and that told the model that the move higher was not convincing. It will come down, and sure enough, 3 days later we saw this collapse here. It was a major collapse after hitting 1.1740, and when it was collapsing, you see the volume here picking up again. We have these big red bars which were much higher than the green bars, and they were continuous red. Maybe a 1 2 3 4 5 red bars continuously, suggesting a major downtrend had begun. But then yesterday and today we have seen euro dollar just rising a little bit more, about 100 points. But again, we look at the volume data and we see that they are on low volume. You see yesterday's volume just slightly above day before, but that's nothing compared to these red volume bars and this big one here. So we consider this move higher to be just a minor retracement in the major downtrend here. We potentially see the euro dollar breaking below to 1.15530 today itself, because today we had the 10-year auction, the US Treasury, and we see very strong demand, which is going to make dollar demand fairly high before the auction itself. So we see a sudden fall here in the euro dollar. I think the retracement is over. We did see we have not I know we are slightly stretched on the exposure, but that's because of just the potential of this huge down potential here, and we do not feel the need to take unnecessary losses when we can clearly see that this is just a minor retracement. We should fall down. So that's primarily. We generally don't look at the volume, but I thought it might just be useful for most of you to see what exactly is a model really looking at when it is coming out with these bearish calls. Many people were going long here. Many of our clients were very worried when it was going high. They said, should we go long? Will it go to this? And we did tell them that this is just a minor retracement, because the volume was not there. The big players weren't getting their teeth in the game, and they were just waiting it out. And then sure enough, it just collapsed, and now we see another collapse building up here. Possibly by today mid-London session, we should see this below 1.16, and then a collapse into the New York session. And we see today and tomorrow to be a continuous fall, a forceful push down below 1.15, possible to 1.14 as well this week. So it's a major week for the euro dollar. We would suggest that you be well exposed on this pair. There will be a time to cut down exposure, and I think that will be somewhere around the 1.14 level. And by then we should have made a fair amount of return on this trade. We have been long for quite a number of days now, possibly 5 weeks now, and that's because I think it fits in well with the plan, because because of the dollar's high rate, we are able to sustain these trades in our account, because we are continuously paid the positive carry holding the dollar long. So just stay with this. You notice how this broke down here. You see that this move here, and then there was this minor dip back, and then again a continuous fall. This is exactly what we're expecting here. We see a collapse here, a minor retracement, and then a continuous fall down to 1.14. So that's a euro dollar. We are very, very bearish, and we continue to be very bearish. And if need be, if to protect any kind of margin call we are very happy to take a few losses because we have already been in very strong profit this month, so we don't mind giving, but we'll not take that unnecessarily because the model's very bearish. We just need to manage our positions. What about the GBP USD pair? Now this is the kind of move that we'd expected in the euro dollar. You see this collapse here, and then there was minor retracement. Some people got caught here long, and then it collapsed here again. No retracement, it just kept falling. And this is the kind of move we're expecting in the euro dollar. Concerning the GBP USD, well, we could see some minor bounces, but nothing major. Again, these red bars are overwhelming. The green bars are lower in height, the red bars are higher and more in number, and that just suggests how bearish this market is. Just looking at the dollar index as well, it's very comfortably placed about 95, isn't it? That's just a giveaway clue that what's going to come next. Earlier every time the dollar would go about 95, it would fall down below 94 or 94.5, but this time we have seen continuous closes about 95, minor retracement being held at 95, and we should proceed higher. What about the USD CHF pair? Well, again, this doesn't look bearish in any sense of it. It's just consolidating before a push higher to 1.02. Another pair we really like to long is a USD CAD, but the model doesn't trade this too much, and we will not be trading till we're trading the euro dollar. So USD CAD looks very good and primed for 1.36, and those of you who would like to take a long can do it. But you see this push here, this is forceful push higher outside day yesterday. This is a result of the NAFTA deal not going through, and there are discussions that are not happening according to the script, and therefore USD CAD isn't really going down. So we see a push higher possibly today, and tomorrow we'll see USD CAD moving higher, so you can long if you want. That's the USD. It's also traded on the oil. As you can see, oil's been below 70 for quite a number of days, but the confirmation in oil's downtrend will be below 68, and then I think we'll see 64. But if it does push higher to 72, we could see a little higher to 74 as well. So that's USD CAD. Another trade which we have suggested to go short is the Aussie dollar. This is very similar to the GBP USD pair. You can see this is sustaining below the 75 mark. This downtrend line is pushing it, and it will push down lower. We always back the trend, as you know, and it's always worked for algo 2. Euro dollar, as we speak, is now at 1.1613. We should see this below 1.16. Day's low was 1.1594. We should see right below that today before the mid-London, and by New York, I think we at the 10-year auction time, I think we will be very close to 1.1560. So trades are going as per plan. This is, as you know, it's a golden opportunity. We don't want to let this trade go easily. We can clearly see that this is not falling away. This is kind of a pattern which is very similar to what we saw in GBP USD 2 months back. So that's it from our side. If you have any comments, questions, do email us. Contrarian viewpoints, will be very fine to take a look at them. Thank you very much for listening to us. This is Martin from Live Market.